Hello, Hélio Souza again. As promised last week, we are here for Friday video, but today is Thursday. And because tomorrow, observance of 4th of July, a lot of, the federal government is closed. Consequently, banks are closing. There are not going to be any activity. So I'm going to post this today. It's at the end of the day. Beautiful afternoon. And as I promised last week, what is the relationship, what's going on now, and what has happened in, kind of one decade after another. And I will elaborate a little bit more throughout this video. First, let's start it with mortgage. If you don't know, mortgage per se, it's a very unique thing. So banks, institutions, they lend money to individuals. Back even in the 1800s to late 1700s, it was very common to farmers and many entrepreneurs and big companies goes to bank. They go to bank, ask for money for their daily operation, and farmers, they need the money to plant and get the seeds and pay the employee and so forth. And then that's pretty much what kind of lending started, all the way back then. However, more specifically to lending in residential transaction and commercial transaction, we needed to go back a little bit further. Let's go back, since we are a mortgage company, talk about residential transactions. Let's go back to the FHA. And FHA started in 1934. So since 1934, that is an official government agency backing FHA loans. And throughout these many years, has suffered a lot of improvements. And they become way more aggressive than they used to be, of course, since 1934. However, the agency did not become a part of HUD, Housing Urban Development, until 1965. Things getting, a little bit in a different level. Volume was unbelievable, in the 60s. But for those that has been doing this for quite some time, remember very well that from that time, probably until the 70s, late 80s, he ain't know that interest rate that we are dealing today, We're talking about double digits interest rates. Guidelines was unbelievable, was very severe. Today it's a little bit different. And of course, construction house is better today than it was before. So I don't want to go into a lot of details. Fannie Mae, which was implanted in 1938. So we have 34 for FHA, Federal Housing Administration. It's a loan that everybody knows, has mortgage insurance, two types of mortgage insurance. One is called upfront MIP. The upfront MIP has suffered so many different adjustments throughout these many years. I've seen as high as 2.25. Nowadays is 1.75 of your base loan amount. That's the upfront MIP. And then you have the monthly MIP. And in an FHA loan now, if you're not putting 10% or more, the monthly MIP is for the life of the loan. So I'm going to repeat again. If you're not putting 10% or more as a down payment, your monthly MIP is for the life of the loan. Your upfront MIP, the 1.75, it's a one-time fee. We add it to the loan, and then you pay throughout the time of the amortization on your promissory note, either 30 years, 25 years, 20 years. For those that put a 10% or more, after 11 years, the monthly mortgage insurance goes away. Goodbye. It's a little briefly over there. So Fannie Mae, 1938. And then you see that the businesses start, people found a need to buy a house, the so-called American dream. 1970, Freddie Mac was founded. And now you have fuel competition. And of course, don't forget the VA loan, that's another type of loan from the government agency that has been going on for many years. That's a type of loan that serve the veterans. And by the way, thank you everybody on a uniform um, domestically and internationally for your service. What is that has to do with what I'm going to talk about it? Because throughout these many decades here, a lot of things has happened. And the system, the government, and the mortgage-backed securities, the investors, the money people had a different approach for every time we have a crisis. Would you say we have a crisis right now in a mortgage lending? I would say yes. Some people said no. I would say yes, and I tell why I would say yes as a personal opinion. So let's go back just not that far in the 70s and the 80s. Do we remember those, what we call the fire sale? Why was a fire sale? Banks do not want a property. We do not want a property. We want you to pay the mortgage note as agreed on the day of settlement. That's how we make money. That's why bank makes money. We don't care about real estate property. Real estate property is for homeowners, for consumers, and not for banks. So we had that fire sale. Then you remember very well, not too long ago, too big to fail, right? We had the 2008 crisis. What's happened? Banks had to take a lot of housing to their REOs, into their books. It was a kind of a different of fire sale because there was, before really happened, the short sale transactions, the foreclosure, there was something called the refinance short payoff. And very few people remember that. Before really hit the fan, short sale and foreclosure, we had the refinance that we used to do a short payoff. You had it first and a second, but look, the house appraised for this, that's how we're gonna refinance. We did American Trust Fund to help a lot of consumers, thousands of consumers, to do the short refinance. And then the short sale hits the fan, the bank saying forget about it, that's what it is, that's what it is. Well, we are 2020. What is the similarity here? The banks don't now want the properties, right? The population is much bigger. We can't compare 1934, 65, 38, 70, 2008 with the today's population. We have over 330 million people in this country. You know, our mortgage-backed security probably hold on a neighborhood of 10 to 12 trillion dollars in loans for residential, commercial, give and take. So what are they doing now? What is the similar? Why? My personal opinion about this crisis. In 2008, we had the MAK, we had the Department of Justice, we had even banks doing the loan modification. Well, what is the loan modification interest rate? If you remember very well, it's not too long ago. Don't you start with the first 5 year 2%? And then goes 1% every year after, and then once you pass, I believe 7 years, it's a 40-year amortization. You have a 33 years fixed for the remaining of the note. Remember, we are selling 2% interest rate now. And why this interest rate is so aggressive? Why? Because we want to keep things down. The system does not want to house. The banks cannot afford to have real estate property. So we are not letting this machine stop. Because if the machine stop, if one link breaks, the whole chain is broken. Then we don't have the money moving forward. We need that money move forward. Refinances, we usually a purchase type of shop, but we have seen that refinance has catch up a lot. We are about 55, 45 right now. We do have a lot of purchase because we do work with a lot of real estate agents. But a lot of my past clients, I take advantage of my 2.25%, of my 2.5%, even a high balance loan, either Fannie Mae, Freddie, or FHA, we are selling rates under 3%. Why is that? This is not an accident. Stock market it's still okay. We lost 3,000, 4,000 points, but this week has been beautiful. June, ironically, was unbelievable. You know, despite 40 million people without a job, real estate business, people that's in lending, mortgage, industry in general, and everybody directly and indirectly are taking the benefit of this. We can't stop this machine. We can't stop the wheel spinning. We should not. And that's what I'm thinking. That's personal opinion. The relationship between all these crises in this decade, it's a different approach now. They become smarter. We are smarter. right? The whole system is smarter. We're still offering a loan modification rate, 2%, right? But now it's a 30-year fix. Do you believe that? Do you understand what I'm trying to tell you? That is on a 30-year fixed note. 30 years. You can get as low as 2.25 to 2.75. Credit score is a big player, but we don't want to talk about credit score here. We're talking about the note, the interest rate in the note. And I want you to really try to see this whole thing from a different angle. You understand that the similarities is, we know that the bank makes a mistake in the 70s and the 80s, make another mistake on the 2008 crisis, short sales and short payoffs, and let's take everything to our books. Well, we don't want a house. We don't need a house. And what is the different approach now? Keep it. What is ahead? We don't know. I don't think anybody knows, because the more you try to predict something, I guess what? It's like flipping a coin, and even a monkey can do that. It's a 50-50. Your predictions could be, you nail the prediction, it could be right on it, but it could be totally the opposite. So I hope you have enjoyed this video. It gives a little bit idea what my surprise was. I will have another one, for next week. I hope you enjoy 4th of July. I'm very proud to be an American. Thank you. When I came here in this country 30 years ago, not 20, 30 years ago. And it has been a very long journey, and I'm very happy to be here. I'm very happy to share my experience with you all. I'm very happy to serve you, especially my community, the small community, either the African community, the Latino community, any small community. They are underserved, and I do believe that. And I'm here to tell you, when we talk about mortgage, you know what you're gonna get from us. American Trust Funding is a dream that became a reality, because we treat consumers like our own family. So I hope you have enjoyed. Be safe, be careful, don't drink and drive, and I look forward to see you next weekend. Ciao.